FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
This episode of the Financial Survival Network is brought to you in part by Sandstorm Gold Royalties. Sandstorm Gold Royalties is a different kind of gold company. They purchase royalties on select mining operations and receive a percentage of the revenue in return. Sandstorm now has a portfolio of over 185 gold royalties around the world. See how gold royalties differ from other gold mining investments at sandstormgold.com. That's sandstormgold.com. Sandstorm Gold Royalties trades on the TSX as SSL and on the New York Stock Exchange American as SAND.
Welcome, and you are listening to the Financial Survival Network. It's 12/18/18, and I'm Kerry Lutz. Hey, welcome to the show. As always, we love when you participate. My favorite part of the day is hanging out at an undisclosed coffee shop, banging down a cup of Java, reading your emails. So send them to kl@kerrylutz.com. Well, we've been having a real party on Wall Street, although not the kind of party that Wall Street really enjoys, where they take your money, earn their commissions or don't earn your commissions, and then give you a little bit less back. That's the way it works. But right now, they're giving you a lot less back. Is that going to continue? Are we in a bear market? What's going to happen with China? Well, our good friend from InTheMoneyStocks.com, Nick Santiago, is with us now. Nick, welcome back.
Great to be back, Kerry. Thank you for having me once again.
So, what is going to be with this market?
Well, seasonality-wise, we should see the market start to rally here. I don't know if we can get a day where the markets actually finish up at the highs. Every day it seems like we rally early and then we sell off right into the closing bell. So we'll see if that theme continues. But I'm looking for the markets to start to reverse here and to get a bid probably into January. January, though, into March, I think we have some tough sledding ahead of us. But nonetheless, I think that's how it's all playing out right now. You got lots of drama going on, whether it's the Mueller investigation, whether it's China and the trade wars, or so much, and there's just so many other things out there. Whether it's the Democrats taking over the House of Representatives, there's just so many different obstacles out there. So markets right now are trying to sort it out. But seasonality-wise, we're at a week where we should start to see these markets start to reverse. We have a severe oversold condition in place. It just goes to you just need to see a market hold up into the end of the day. Once we see that, I do think we'll get some follow through, and we'll see a pretty nice rally into the new year. And then after that, we have some more choppiness ahead. But it's a trader's market right now, and you have to really be nimble.
Yeah. So, and it's volatile, which is good, right? Traders make money in volatile markets, right?
Traders like volatility because it gives you options. You can go long, you can go short. It gives you a lot of options. So it really is a true trader's market here. 2018 was supposed to be like that. For a fair amount of the year, we didn't get that, but now we are getting it as we get into the conclusion of 2018.
Mm-hmm. So what about the other markets? Oil, that's really hit the skids. You were saying that was going to happen. That was your call a little while ago. So it's kind of coming true, isn't it?
Oil has actually gone even lower than I have expected. So I thought we would settle in around, the low 50s. We're now at $47. Oil's down another 5% today, trading at $47.72. So it's probably going to go down to 45 now. That's the next big support level for crude. But, I never feel like oil going down is a negative. I mean, I go to the pump, it's a lot cheaper for me to fill up my gas tank. I own 2 trucks. So it's just a lot nicer.
Yeah, well, hey, from a consumer standpoint, yes. If you're an oil producer, not so much, right? And if you're a bank loaning to oil producers, you got to be very unhappy now, right?
Yeah, that's it, certainly, and that's why we're seeing the bank stocks suffer right now, is simply because oil has gone down so much, and they're like you said, they're lending money to the oil companies, and bottom line is, if the oil price doesn't move back up soon, we'll go back to where we were a couple of years ago when oil hit $26 a barrel.
Mm-hmm. And you think that's possible, or wouldn't last for very long, would it?
Well, I don't think it would last for very long, but I do think it's always possible. When these markets, especially the crude market, I mean, we've seen, all commodities have dramatic price movement. So sometimes, these things get overshot to the upside. Obviously, I never thought, and I always said I never even thought oil should be at $75, $80 a barrel anyway. It was just, baffling to me that we could just get a news headline, whether it's from something from the Middle East or Iran, and then next thing you know, crude oil has got this premium built into it. But it really had no business being up at $75. The world is flooded in oil, and there's so many people producing it, and we produce it here in the United States, and there's more than what we need. So it never really needed to be up that high anyway, and now it's trying to find its equilibrium point.
Yeah, and it's got to be somewhere in that 50-60 range, you think?
I would even say 40 to 50. If you think about it, the high on crude, I think, was around $78 or $79. So when you think about where that recent high was, and now we're trading in the high 40s, somewhere in here is probably the right spot. The market always seems to exaggerate to the upside and to the downside. So, yeah, I would think somewhere $40 to $50. After all, I mean, you still need crude. You have to have paint and all the things that crude oil helps to produce. So it's not like it's something that we don't need. We definitely need it. But there's just an abundance of it. And, you also have a strong dollar. A lot of people don't realize that as well. The dollar getting stronger also, knocks down the price of crude oil. And I foresee the dollar to be stronger in the coming years as well.
Hey, well, that certainly has been the case. It's been kind of stuck around that mid-90s level right now at 97 and change. But you've been of the opinion that it's going to go even higher.
Yes, I've been in that opinion really since the start of this year, and I remain that way. I still think if you look at the chart put in a significant low in January and February, and really crude's it's in a very strong uptrend. So when I see trends like this, I just give it the benefit of the doubt. I don't think there's really any reason to fight it. It doesn't mean it's going to go straight up. Like I always said, things, will pull back, they'll consolidate. But right now, crude oil has certainly been a big winner in 2018. Yeah.
So what about precious metals here? They've kind of been stuck in the middle, right?
Yeah, so gold, I have not really, been a gold bull. And then in full disclosure, I own gold bullion, I own silver bullion, I have for years, and I always will. It just gives me the ultimate insurance policy. But gold has held up very, very well, and I think a lot of it has to do with the fear in the stock market and people saying, hey, the ultimate safe haven is gold. And I actually believe that myself. Gold has remained constructive, even though I have not been very bullish on gold, and I still think when things calm down in the market, we're going to see gold pull back due to the strong dollar. But, overall, I don't see things like the GLD, which is the gold ETF, trading much below, the 108, 109 level. I don't think spot gold is going to trade much below the 1150, 1140 level. I think that's a floor in gold for now and ultimately a buying opportunity.
Ultimately correct. I think you're right on the money there. Just a matter of time. It's surprising to me that gold hasn't taken a bigger hit with a stronger dollar, but the dollar has kind of just been kind of sitting there for a while. So then looking at, I don't know, what else do we have to look at? Stocks. So you're thinking once all this drama is over with, we're going to move onward and upward again?
I think right now we're due for a bounce. So, generally, historically speaking, when you get to the week before, this is the final trading week before we go into the Christmas holiday. We also have some important, you have the winter solstice coming up, the start of winter. Usually you're going to get a market run into January, and that's what I'm looking for at the moment with this oversold condition. So I'm long stocks at this stage of the game for a trade. Then when we get into January, we always want to re-examine and we want to see where we are. January is a very pivotal month. If you look at last year, when we got to the end of January, we had that very, very sharp sell-off into February. So we always look for a pivotal change in the month of January. But I think these markets remain very, very choppy until the month of March. But at this stage of the game, I am still looking for a nice little rebound bounce. Not to new highs. I don't think the S&P is going to break out to new highs. But I think, can you get back up to when you look at the S&P 500, the recent peak was around 2,800. Yeah, I think you could do that. I think that's what these markets do. Nothing goes down in a straight line. I just wrote an article today on my website telling people, hey, some of the best money is made in these bear market rallies, if it even is a bear market. I don't particularly believe it is, but I do think we're going to have more volatility probably into the month of March. And then March, I get very, very bullish this market for a fair part of 2019.
Interesting. And so any other markets you're following that you think really have a tendency to outperform the others or that you really want to be involved in?
Well, right now, what's on my radar, believe it or not, is the retailers. They've been hit pretty hard here over the last, I'm going to say, probably 5-6 months. So retail comes down a little bit more. I start to like that for a bounce. And when I say retail, I mean the Costcos and the Home Depots of the world. I think, you stick with the best companies, and they should get pretty good rebounds going forward. So I'm looking a lot at a lot of different retail companies right now. I think that's a sector that's poised to get a nice upside surprise. Technology is going to have its fair shares, but you got to be nimble in there. Whether it's Apple or Google or Amazon, all of these stocks, they'll have bounces and then they'll come back in. So you got to really know what you're doing as a trader. When I talk to to your audience, hey, they may want to look at the Home Depots of the world or the Costcos of the world. I think these are stocks that are setting up to have a nice little pop very shortly, because the whole sector is at a very, very good support level now.
Yeah, that's interesting. So retails, and yet the consensus is retailing is headed for a quick grave, huh?
Yeah, that's the consensus. But, I'm not in that camp right now. I don't see it. And another group I actually like right now is the home builders. So, I know people hate the home builders. Interest rates are going up, but I don't think interest rates are going up all that much.
Oh, that's what I was going to ask.
So
yeah.
I like home builders here. I think that sector has been beaten up as well. I still think there's one more minor leg down in the group. Mm-hmm. But, one of the ways traders can play it is via the ITB, which is the iShares U.S. Home Construction ETF. That's at $30.90 right now. When it gets to $28, I'm going to be buying that. So, this is another group. You watch these industry groups that are really beaten down. You look for the major support levels. And, if you look at something like the ITB, you could just see that in 2015 and 16, it just went sideways at $28, and then it broke out to the upside. Markets love to retest their breakout levels and get supported there. That's where you look for bounces. So there's some really, really spectacular trading opportunities that are on the horizon here.
Yeah, the home builders have lost like close to half their value. And, you've got, the major home builders just, they were stellar performers here for years, Nick. And now, not so much. You really think they're going to come back yet again?
Yeah, I think for a trade, yeah, I do. I think for a trade, for 2019, that's a sector that I'm really interested in. So you say get a stock, for instance, like Lennar. It's trading at $41. Do I think that stock can trade back up to the low to mid 50s? Yeah, but think about it. That's a fantastic percentage gain. You can make 20% on these kind of stocks. I mean, This is what traders do each and every day. So we look for opportunities in sectors like this. But yeah, I like Lennar right now. I like Toll Brothers right now. There's a lot of stocks out here.
Toll Brothers, huh? You're a Toll Brothers fan. Yeah, you think they could do it, huh?
There's another stock that went down to $29. It's at 33 now, but I do think this could trade back up to 40, 41. You're talking about 70 points on a $33 stock. These percentages are really, really good. I'm not looking for them to go to new all-time highs or anything like that, at least not at the moment. But for a trade in 2019, I mean, these are very, very good companies to own. And especially, the Fed pauses here. They're expected maybe to raise rates tomorrow by a quarter point on the Fed funds. But just think about it. If they don't raise again in 2019, home builders, they should really take off to the upside.
Interesting. Yeah, so rates. Let's talk about rates real quick. This week, the Fed meets. Are they going to do it? Are they going to keep their powder dry and hold back? What are they going to do here?
Well, they probably wouldn't have done it, but President Trump has really put a lot of pressure on him, and that's his style. His style is to just call you out. So he's kind of done that. So the Fed probably goes one more time tomorrow, raises Fed funds rate by a quarter. And I think that'll be it. I don't see another rate hike for 2019. I think we're done. And I wouldn't even be shocked if they don't even do it tomorrow. And they just say, hey, due to the circumstances with the market volatility and, all these other countries that are these emerging markets and European markets that are falling so hard, we're gonna just stay pat. I mean, honestly, there's no inflation. All right, they're raising interest rates for really one reason, right? They're trying to help out these pension funds that have been on the wrong side of every investment for the last 10 years. So, that's really what they're doing. There's no inflation in this country. I mean, you get a little food inflation here and there, but look at the price of oil. Oil has slid. I mean, I just bought my kids new computers for Christmas. I mean, they got a great computer, for $500. You couldn't do that, 10 years ago. So there's no inflation out here. There's just deflation. I know wage pressures and all that, but I mean, it's so minuscule. It's a joke.
Yeah, gotcha. So any warnings you have out there for end of the year? Anything you see that could really foul everything up and cause massive losses?
Well, I mean, we've already had quite a pullback from the from the September top. So, market peaked out on the right around September 20th, and then really in October, I got very bearish on right at October 3rd, and I wrote a note to my members, hey, to be careful. But now, I'm looking to buy stocks for end of year rally. So if we take out the recent lows and we do it on some volume, you got to be really careful because these markets, can come down a lot further, once you get a lot of panic out here. But at the moment, I'm still trying to be constructive on the upside. It hasn't been easy, but again, that's what traders do. We try to, manage our emotions and just use the charts. And the charts right now, we are still at a very, very good support level, and we have an oversold condition. So you look for a bounce, but we're going to still continue to have this volatile market probably until the March timeframe.
Interesting. Well, you've been out ahead of the market a lot of times here, Nick. So we have no reason to doubt you now. That's for sure. Hey, you want to find Nick's work? Go to inthemoneystocks.com. What's our latest offering there, Nick?
We always offer a 7-day free trial to our intraday stock chat room. You could be in there and trade right alongside of us each and every day. We've had a blockbuster 2018. Or you can come over and check out our shorter-term swing trades, which means we hold overnight to a few weeks. We offer a 7-day free trial to that as well. And again, that's called our research center. So come on over, check it out, and just check out the blog. We put tons of information there as well, and very, very informative stuff each and every day.
Very cool. Hey, well, thanks as always. You want to find out more? You want to be a part of the show? Just email us, kl@kerrylutz.com, Twitter feed @KerryLutz, Facebook page, Financial Survival Network. Hey, if you're on YouTube, then please subscribe, like, and share us. We've been getting more and more YouTubers lately. Nick, always great having you on. We will follow your predictions and talk to you after the first of the year. Happy, healthy New Year. Merry Christmas to you and yours.
Happy holidays, Kerry. Thank you very much for having me.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.